Good evening from Hong Kong. Good morning to most of you. Thank you very much for joining this live stream. As always, guys, this is not financial advice. This is just for entertainment only. Be smart, do your own research, check your own facts, always, no matter where you hear or read things. Let me show you what I've got in stock for you. US retail sales numbers have just come in and they are surprisingly good. We also have European car registrations. We have US EV registrations. We are going to talk a little bit about SoFi and what Yellen just said on inflation, which I take as a little bit of a warning to growth stocks. We then have the DIDI can of worms that's just properly been opened. We also have Intel looking to buy global foundries. Intel wants to become a manufacturer for others for chips. And talking of chips, chip supplies is going to improve for car companies. The NIO IPO is a little delayed, and we now understand why. I'll explain that. And of course, I'll take your questions, guys. Ask away. Don't be shy. Just join the. Just hit subscribe, and then you can ask questions in the chat. And no restrictions there whatsoever on. You don't need to be a member or anything like that. And of course, I'll also throw in some free wealth building tips as always, guys. And bear in mind the courses down below, stocks and options. And if you want to build some wealth, take advantage of that coupon code Build Wealth. It is expiring on Sunday. And for the Master Stocks course, at least, I won't be putting out another coupon code. So take note. Now, what have we got? Retail sales numbers, I want to show you that. So they came out literally half an hour ago, and they were expected to be 0.4% down. That's how gloomy people were expecting them to be. And instead, they are 0.6% up. So that's good as a sign that is it a sign the economy is recovering, or is it just a sign that if you lock people up for long enough, they'll go out and buy things? That might be the explanation there. If you take out the automotive numbers, which are a little depressed because of delivery slowdowns, it's actually even better. So it's about 3 times higher than expected. Now, in the inflation discussion, that of course puts a little bit of pressure on because it's an indicator that the economy is recovering faster. So we're in a really weird world, aren't we? If we are heavily invested in growth stocks, we sort of don't want the economy to do that well. We want people to be unemployed so that our growth stocks go do better, which is a really strange place to live in. But that's a little bit how it works. And if you, again, want to understand these economic indicators, guys, I'll discuss and debate all of that and explain it rather, not debate, in the Master Stocks course to really see what one of these matters here. Let me just say hello to all you guys here. Rocky, Philip, Nicholas, and Philip and MC. Great to have you on here. It looks like a heat wave in Europe. Nicholas saying 31 degrees here in Sweden. I think that's even hotter than it is right here in Hong Kong. And Philip says, can Yellen basically just be quiet? Well, yes, they can't really. So what she said, I think I still have it open here. She said, I think we will have several more months of rapid inflation. So I'm not saying that this is a 1 month phenomenon, but I think over the medium term, we'll see inflation decline back to a normal level. But of course, we have to keep a careful eye on it. That last sentence I don't like. Had she zipped it after a normal level, it would have been good for the market. But that last sentence is a little bit of a dangerous one here. But there we are. We can't control them. Now, Europe's car registrations, and you might wonder, why do I care? Well, if you invested, for example, in Tesla or something like that, it doesn't matter. They were expecting 22% growth. They only got 10. So Europeans not buying all that many cars. The inflation numbers, though, in Europe are as expected, so no panic there, which is, I think, a good thing. And we are going to get in the next hour or so some Michigan inflation expectations as well coming in. So people are going to watch those fairly closely as well. Rashid, great to have you on the call. Fauci says it's rain-enduring durian season here in Malaysia. If you haven't had durian, it's one of the smelliest, but really very tasty fruits. That's a big thing in Malaysia and Thailand and places like that. And Hong Kong here as well, we have it too. It's exceptionally stinky though. Chris says he needs to have his daily dose of Palantir. Have I actually got much Palantir on the list here? Not all that much. I mean, the main thing on Palantir, Chris, that is out on a put out a video for that later while you are hitting that like button. They have put out a video basically sort of advertising their services in the energy and utility sector. And they're saying we are serving utility companies and power and energy companies. And I can't actually think of a utility company that they serve, but they must be serving at least one. Otherwise, they wouldn't be saying it. But it makes a lot of sense because all that investment in the grid, all that investment into kind of decentralizing power with all the solar stuff and wind energy and everything makes the electricity grid a much, much more complex place. So you will need a big data kind of processor, if you will, to handle that. And it makes a great deal of sense that Palantir is in that. So I think it's an exciting one for them. It'd be a good, I like it because it reminds me of, well, utilities used to be government owned. So they are similar beasts. Once they sign you up, once they have you running their systems, they're very unlikely to change, very much like government's departments. Jan Dijk, thanks very much for liking that there. Jan, if you are in the Netherlands, do you know a good options broker in the Netherlands? One of our guys asked me by email just now, and I would love to ask some of you Dutch guys out there if you can recommend any at all, and I'll pass on the message. Chris is saying, do you think Palantir will fall below 20? Okay, let's pull up the stocks. Let's have a quick look at pre-market, and then we look at the Palantir stock due to popular demand. I'm happily swayed. So everything looking pretty green, right? Palantir here now at 21.71. Pre-market NIO up as well at 44. Everything pretty much up with the exception of RIDE, which makes sense. And DIDI, well, they are just getting probed in every possible manner. So that also makes sense. So at the moment, the market looking very, very happy. Bink Bank MC says, thank you very much. That's super kind of you. I will pass that on. I'll write it down. Bink Bank. Okay, fantastic. Thanks, MC. Andre says we're going to have big inflation. Well, 5.4%. Is that not big enough for you? And Inge says Trade Republic. Okay, thank you very much for all our lovely Dutch friends here, guys. MC, Inge, thank you. So let me pull up Palantir here. And feel free, guys, to ask things and derail me from my plan. I like being derailed. It makes this more fun and more interactive. Now, if you look at the chart from yesterday, not the most brilliant chart in the world, is it? What you can see is that we had a serious low point, which was substantially below where we were. So it's a good job we managed to kind of close sort of at the halfway mark, but it's still lower than the previous day, and that's not nice. So it is very much a sort of falling knife situation. Volume slightly lower than the day before, but not really a big enough decline to tell us that this sell-off is over. And if you look at indicators, they are all basically showing you the same sorry story. That there is a very slight improvement in momentum. There is, but we're still very, very much oversold. And I don't like to buy oversold things. I know some people do, but if you just look at this very simple trade, so where I just put in these two horizontal red lines, that was the buy signal here. You can't see the chart. I'm sorry, guys. I'm talking to myself again. Right, okay, here is yesterday. You can see we fell quite a lot lower during the day than where we closed at, which is good, but we still closed slightly below the day before. Now then the volume is a little bit less, but not substantially less. So it's okay, but we'd like it to be lower. And then on Williams R down here, you can see we are in the oversold territory. So the stuff below that thick dashed line there is oversold. Inga, thank you for the screen mention. I'll try only to do it once a call, just to see if you're awake, if you're paying attention. Then that's how I know that you are watching. So slight improvement, but not enough for me. And if you have traded on these signals, for example, and perhaps even done it with options, you would have gotten a tremendous return. So this one here where the purple line crosses the green line was a buy signal on the 17th of May, and then we get a sell signal here on the 30th of June. And that trade would have gotten you in at 19 and a bit, and it would have gotten you out at 26. So fantastic return, right? 30% plus. If you are doing options, you would have made an absolute fortune. Would I have bought the bottom of the market? No, because the bottom of the market was here at 17. So yes, I would have missed out on that. And then similarly on the way down, again, I would not sell at the top of the market because nobody knows what the top of the market is. Now, I know lots of people pretend, but if they knew, they'd be trillionaires and they wouldn't be talking to us. So nobody knows. And in reality, therefore, you're usually 2 or 3 days late to the party or 2 or 3 days late out of it. And I'm very happy with that because you can make very good returns with that strategy. Nothing wrong with it. Buying in the alleged bottom of the market is speculation, so therefore I don't do it. And if you want to understand a little bit more about technical analysis, guys, check out the Master Stocks course. There's tons of it in there. Of course, the options course also has quite a bit of TA, but mainly in Master Stocks course, I sort of take you from an entry level to being an absolute whiz kid on this for the real strategy. So take advantage of that Build Wealth code while it is still around. Martha, hello to Cancun. Great to have you with us. Lil is asking about NNDM. Okay, let me add that to the list. I'll add it down here so we won't forget NNDM. We get to that in a little while. And Rashid says, as a long-term investor, do you focus more on fundamentals or technicals? I think long-term, very, very much fundamentals. That outweighs absolutely everything. You can ignore technical analysis and just buy good stuff. If you hold it for long enough or you buy it in increments over time, every month, say, then in a sense, you can ignore the share price completely. And I do that, for example, with my core portfolio. So I buy things like PayPal and Microsoft and stuff like that every month. I don't look at the share price. I honestly do not. I couldn't care less what it is. I just buy it every single month. But if you are getting into a bigger position in the short run, or you are somebody who trades in and out of stocks, or you are putting a new position on, say, a very volatile growth stock, there is an advantage in buying NIO at, say, 35 rather than 50, right? I mean, you can see the advantage. So I think there is sense in doing a little bit of both, though if you cannot be bothered, you could literally stick just with fundamentals. Sticking just with TA, as an options trader, you can. As somebody who buys and sells shares, I kind of wouldn't, because you're not going to get that great a return, really. Justin Alpha saying, doesn't indicator like Williams R only work on a daily basis or also 4 hours? It also works on 4 hours. So the difference is if I change this to a 4-hour chart or an hour chart or a minute chart, it predicts the next couple of intervals always. So it tells me here, say, momentum for a couple of days ahead. If I look at a 1-hour chart, I'm getting information for the next couple of hours ahead. And that may or may not be useful to you. If you are day trading, it may be very useful to you. But if you are looking for my more sort of longer term entries, I typically look at the day. You can look at the 4 hours. It tells you, it just makes it more sensitive. So it becomes more volatile, and it would mean you trade a great deal more. So say, if I pull up the 4-hour one, okay, and then you see that this beautiful 30% rally we had here, right? You would have gotten out of it halfway through, you see, and that wouldn't have been good. So if you are more a longish kind of a trader on a stock, then I would go with the 1 day. If you are really aggressively trading, then you obviously have options. Jan van Dijk lives in Germany now. Okay, I'm German, if you didn't know that already. Quell and Rot merger, good buy now under $10. I mean, I like Quell. I think it's one of the better SPACs for once. Let's pull it up here. You're properly sidetracking me now, which I appreciate, guys. It's so it's still trading basically below its cash value, right? Which is nice. So when does this thing come about? What was the opening trade? 10.16 or so. So typically these SPACs are capitalized with $2 billion, and they start their life at $10, and then they sort of hover around the $10 mark. I mean, it's not far off $9.94. I mean, you're getting 6 cents there. It's not the greatest profit of all time, but I think, okay, SPACs like this are speculative because this company, Quell, if I remember correctly, they don't aim to sell anything till 2024. So this is like private equity investment, basically. It's very early stage investment. So you need to be aware of that very early risk. I mean, you can, of course, hope for these massive bounces, breakouts in these SPACs. So I think people are going to be a little bit more cautious with that because they've had now some bad experiences. I think CCIV. So therefore, I think, is this going to go back up to 15 like that? Probably not in the short term, I would say. Cillian says, consider that like button. Smashed, Felix. Thank you very much. Truly appreciate that. Cyrus, good morning to you too. Okay, I'm going completely off plan here. So let's have a look at what we had here. Okay, US EV registrations are up 95%, which is tremendous. And of course, Tesla very, very much running that party in that market there. But it's still only 2.3% of the market. So the US still lagging very much behind in the EV sector, or you could say huge opportunity in the US for the EV sector. It depends on how you look at it. But anyway, it's good that the numbers are going up. And then interesting statistics out is SoFi has the highest buy-sell ratio. So it means the most transactions are buys versus sells. Is that therefore a positive? Is that enough to be bullish on it? Here you have it. Something like 80% of total orders, 75% of total orders are positive. So fairly unusual, but I just thought I'd throw it out there because I saw that chart. So let me know what you guys think. Make of SoFi at the moment. I still think it's being crushed by Wall Street. Yellen, we just covered on inflation. She basically says high inflation is going to stick around for some months, but it's going to go away in the medium term. And then she said the very unhelpful sentence, but we're going to keep an eye on it. And I wish she hadn't said that, but there we go. DIDI's can of worms just got opened, and let me show you that. It's on our Discord here. We have a Chinese stock section here. DIDI Global, at least 7 departments have now gone to basically investigate DIDI. And that is, if you follow the Alibaba story, exactly what happens. One department goes in, they find one thing, and they tell their friends, and then before you know it, everyone's there and says, hit the like button. And obviously that isn't good because they're going to get investigated by absolutely everybody else. It's a little bit the same thing that happened with Alibaba. We started with one thing, and it led to another, and it led to another, and it leads to another one. So that's just the way it works. Anita, good to have you on the call. Thank you very much for joining. What are your thoughts on DIDI, says Mike? I mean, if you watched my video before the IPO, I was basically saying, okay, good company, 90% market share. They're not making any money, and I can't really see how they will. If you have got 90% market share and you're not making any money, how will you? The expansion plans are into grocery deliveries and logistics, which is a very competitive sector where it's very hard to make money. Having said that, they do have 90% market share of China, and they are going to keep quite a lot of that. So the valuation, I think, at the moment is a reasonable one. But a lot of these sharing economy stocks, here it is, I struggle a little bit with the business model because what is to stop others from running essentially the same service? Say NIO or XPeng or BYD, why don't they run their own fleets? And as autonomous driving is going to come, and it might well come. I think Winter Olympics 2022, I think could be a good one for level 4 at least to be allowed, which basically means you no longer are driving; it's just someone sitting there. And we have lots of robo-taxi fleets now who are out without drivers. So China is very aggressively pushing towards that. And as soon as that happens, every car manufacturer is just going to run their own robo-taxi fleets, don't you think? So the competition is going to be there. So for that level, I have the same concerns with Uber. I have the same concerns with Airbnb. I struggle to see their moat. I know it's popular and it's a fantastic service. I mean, I love Uber. And if I'm in mainland China, I love DIDI. It's the only way to get around. But that doesn't mean it's a profitable business. So that's a little bit my concern. If you compare the valuation against Uber and you like this industry, then I think DIDI is well priced, reasonably priced at this level. But I've done some discounted cash flow models there on our Patreon. So to check that out, the link is below. Adrian is talking about Chinese fintech companies. I think I would look at the smaller ones that are less likely to come under regulatory pressure. The bigger ones are a little bit of caution at present. Fazat, is there a NIO short squeeze? No, for that NIO would need to be shorted, and I'm going to show you that it isn't, because it isn't. So let me show you. People put out nonsense sometimes. The short float of NIO, let me magnify this for you, is 4.6%. You can't squeeze something that is only shorted 4.6%, so no squeeze coming. Perhaps a sneeze coming, but no squeeze coming. Mohammed, good to have you on the call. You are right. TCMC have announced that the chip supply shortage for car manufacturers is easing, which is good news for everybody. Renesas is also starting their plant in full capacity again. So I expect especially the smaller manufacturers to fly. The bigger ones will still have some issues. Bigger, I mean, the sort of Toyota, Volkswagen type companies, but it's gonna get better. Now the NIO IPO, it's delayed, right? And my speculation was that they delayed it on purpose to take advantage of better Q3 numbers. But the actual rumors out now are that because of the NIO user trust, which is one of the big shareholders that William Lee created, so he took his shares, he put it into a trust. That caused some regulatory hurdles. And they also didn't quite comply with having enough independent directors and having enough female directors as well. So that's why they've appointed that lady who is an absolute private equity whiz. So that's apparently the actual reason, is that they had some regulatory issues. That's why it was taking a bit longer. And apparently Lee is going to list in August now in Hong Kong, and I suppose NIO a little bit later. I think for NIO it'll be good to list a little bit later. I think they're going to get more bang for their buck there, because if the share price is higher and you're issuing shares, the company gets more money for those shares. So as a shareholder, I prefer that they dilute at higher share prices rather than at lower share prices. It means that I don't need to do it as often. Nicholas is asking about thoughts on Alibaba and Tencent opening their platforms to each other. So this is all part of the antitrust legislation that came out earlier in the year. So Alibaba's e-commerce platforms are now part of on WeChat, for example, which is Tencent owned, and vice versa. So this is basically, you can no longer, if you have a dominant market share, which they both do, you can no longer keep people out. That's the regulation. And it's a reasonable thing to do. I think it's a regulation that's pretty in line with what we have in the rest of the world. Is it good for either one of them? I don't think there is going to be a massive benefit for either one of them. I think for the e-commerce side, there is some benefit in being on WeChat. But as I say, it works both ways. So I don't think there's any harm in it either particularly, but I think there is perhaps a small gain there for the e-commerce side of Alibaba. Philip is asking about love. You mean relationships and your wife? Yeah, let me have a pull up of that. I don't really know. Do you mean the biotech company, or which one do you mean? There is a NASDAQ one and there is a biotech company, a Canadian one. I don't know anything about either of them, to be honest with you. So I could tell you about the chart, but I can't tell you about the fundamentals. Questions? Okay, we had NNDM. We're going to look at that, guys. And if you want to understand a bit more about technical analysis and research and looking at companies yourself, guys, check out the courses. Master Stocks course below teaches you everything about how to build wealth. And that coupon here will be the last one you see on YouTube for that course. So build wealth, take a note of it, guys. If you are just want to get some insight, get some information, go on my website, guys. There's a free quiz. The link's also on the top of the chat. And take that quiz. And depending on what you answer to that, I'll send you free educational information on how you can build wealth faster, how you can be a better investor. You don't have to buy anything ever. And if you wanted to stop, you just click one button, unsubscribe, and you never hear from me again. And of course, I'll never ever sell your data, guys. So check that out. It's I think a very good way of getting some good information. My plan is always, my intention is to make my free material 90% better than everybody else's paid courses and make the paid premium courses truly exceptional. Aaron, okay, you guys are throwing out some stocks here, which I appreciate, and I am going to go through them a little bit. So let's start with NNDM because that was on our list. And then I'll write down the other ones here, guys. So we had Square, I saw, and we had, Richard, you mean Xiaomi? I presume you mean? Yeah, I struggle to spell it too. It's a tricky one. I also always get told off about my pronunciation of that. I think it's more like Xiaomi or something like that, but never mind. So NNDM here in free fall, right? Which is, I suppose it's a similar, I mean, a lot of growth stocks had this kind of, apologies for the whistle there, that sort of came out. A lot of growth stocks had this very, very quick rally up. And when you get that, you tend to get it coming down as well, like that. So what do we see when we look at this? I like to just look at the naked chart first and see what it shows me. So when the sell-off started, you can see that volume is broadly declining, right? So if you connect this volume path down here, and that sort of indicates that the steam is going out of the sell-off, but then we've had quite a lot of days of sell-off, so that sort of makes sense. But it's not super low yet, so there is still some potential in there for it. Now today, pre-market, we're up 1.5%, so let's see if that sticks around. I don't think there was any major news on this. Joint venture with some German company. But no, we've got earnings coming up 10th of August, so that's fairly soon. That's always a great options trade opportunity. What you can do with options, which is pretty cool, is say the stock sort of does not very much till earnings. Then on earnings, it's either going to go up or it's going to go down, right? They're either going to be great or they're going to be disappointing. Now, if you buy the stock, you are either going to make money or you're not, 50-50 chance. With options, you can say, I'm making money either way, as long as the stock doesn't stay flat, for example. You could then set a little corridor here and say, if it goes outside of this box, if it leaves this little box here, in upwards or downwards, and you can test that and check out probabilities of that trade, you can make a ton of money no matter whether it goes up or down. So a little bit of an options thought there, guys. So let's look at Square then. I think Square was the next one on the list here. So just on the other dimensions, I wouldn't buy something that looks like that because it could continue for another 5 days or 10 days, who knows. So, I don't like to buy things that are a falling knife, basically. So Square looking very different pattern. So what do you see? You see a nice rally with a few little zigzags. And then up here, we see some consolidation, and that's pretty good. And we're doing that above the 100-day moving average line, which is that blue line here. Let me get a little magnifier. And on a relatively horizontal level, and that's a good thing. That builds stability, that builds, let's see where the trade is. So most people are buying between 238 and 245. So we've now fallen below that. Psychologically, everybody seems to want to buy up there for some reason. So we have, let me throw up a Fibonacci here. Where did my Fibonacci go? There we go. Okay, so let's zoom in a little bit. So our support level here, and I'm just going to put a few flags in, is really at 230.60. But you also have the 100-day moving average line. That's typically also fairly good support. So I'd watch out for those on the way down. If we do go on the way up, I'd say the real barrier here is going to be 239 or 240 perhaps. Okay, guys, you're throwing out chats, which I appreciate. Philip, the love sack, Philip is saying, okay, we're going to look at love sack. That's great. What do they do? So an insider makes a significant sale of stock. That was just out today. 90-day selling trend extends to love sack. Someone sold 201,000 shares. 1.3 transaction per company. Okay, so I mean, always watch insider selling and understand why they're doing it. So, okay, from a TA point of view, from a technical analysis point of view, this is a very clear. I mean, it's basically a downward trend. Yeah, we had a bit of a zigzag there, but we are going down. So, I don't like to buy things like that. I'd watch it, I'd look at it, and I'd watch it to turn around, and sort of around about here might be an entry point. And if you look at, say, an RSI, you can see that we are, okay, buy signal would be this one here. So when we cross that green line here, if that happened, that would be a buy signal where that black line crosses the green line. At the moment, we are significantly below that. Now, you could say, well, it's cheaper, I'm going to miss out. But I personally wouldn't. I mean, just back test it a little bit and just see here whether this was a good indicator. So that would have gotten you just this one indicator. I would normally look at more than one. It would have gotten you in at 56. It got you out at 86. So that's a pretty great trade. And then it got you back in here at 74. It got you out at 80. So even that tiny little trade here, that little one will have made you quite a nice chunk of money. So when the indicators work, why go against them? That's just the way I look at it. If you were looking for an entry point, I'd look at it when you're actually getting some indicators there. Desmond says, Lovesack is just a terrible name. Desmond, welcome. Desmond, you have the 6+ member logo next to your name. You must be one of the only ones, because I appreciate you are one of the earliest supporters here. I think this channel is now perhaps 6.5 months old or something, maybe 7 months old. But it took about 3-4 weeks to get monetized so we could have this little membership logo. So Desmond, thanks for your continuous support. Always a pleasure to see you on these lives. Now, we had Square also. Okay, we'll do QQQ as well, of course, is Sunshine. I think that's definitely an interesting one. I'll try to get through as many as I can here. The QQQ is definitely one I think that a lot of people will find interesting. So Square, I like the business. I mean, what's not to like? The question is what's going on here. So we have an actual buy signal here yesterday. And the markets have just opened slightly in the green. So we actually, yes, we have a buy signal right here, right now. And I'll show you that. And that doesn't mean you should jump out on and buy it if you know nothing about the stock. I wouldn't recommend doing that. You still need to understand what it's about. But basically here, that purple line crosses just over. Now, it could, of course, zigzag straight back down, but, that's the risk. Like we had periods here where it sort of went sideways. But at the moment, that's looking quite positive. Now, we've had 4 sell-off days here, and the last one was on higher volume. So for me, that's a little bit of a concern here. That's substantial sell-off there. But I suppose we are starting today with a big gap to yesterday. So that's really why we are getting that change in momentum here that we see on the RSI. So hopefully Square is going to do a bit of a recovery here. We see if there's anything. Square to create a new Bitcoin-focused business. Okay, so they're going to spin that out perhaps, which might make sense from a risk and regulatory point of view. And they also acquired workplace messaging service Crew to strengthen workforce management offering. Okay. And they're going to put out a hardware wallet for Bitcoin. Interesting. Okay, very interesting. Desmond says, let's get to 23,000 followers. Yeah, I think we're just shy a couple, guys. So hit that like and that subscribe button. It would help me tremendously, guys. So smash those buttons and we can have a little mini party when we get to 23,000. Howard says ARVL. Okay, let's do QQQ quickly because I think it's also good to do things that are interesting to the vast majority of people and not just sort of really random stuff. So what do we see with QQQ apart from my enormous, great big arrows? Upwards trend continues, broadly speaking. Let's have a look at some indicators here. So let's look at Williams R because QQQ is pretty volatile. So we had a buy signal on the 20th of May and not since because we've just been in the positive. So that doesn't mean that it says don't buy. It's just saying it's not the greatest opportunity to buy. And the other thing that we see, if we go back a little bit further, I love buying QQQ when we are underneath that 100-day moving average line. So when we are below that blue line here, that's when I love it. But at the moment, we are quite substantially above that. So it is one of those breakouts. It could be like one of these situations, and we could well come down again a bit. I think in the long run, it's all good. It does go up. But at the moment, it's positive, but it's not a sort of the greatest opportunity ever, if you understand what I'm saying. Desmond saying SQ is looking to spin off, which is something I'm sure Tesla investors wish Elon did to reduce volatility in the Tesla balance sheet. Okay, that makes a lot of sense, Desmond. I think just from a regulatory kind of point of view, it'll be different to everything else they're doing. So why not move it out into something else? Okay, guys, let me do a quick recap for those of you who've just joined us on everything we're talking about here. So we've got US retail sales significantly better than expected. We were expecting a fall. We got a nice big bounce. And that is just, it's good news. It's good news, obviously, for retail. It's an indicator that the economy is recovering. Or is it just an indicator that people have been locked up for too long and now they're out shopping? That's a little bit my sort of take on it. I don't know how much it actually says about the strength of the long-term underlying economy. The bond market reacted slightly to it. When I last checked, it was up just a little. Yeah, bond yields are up 2%, not dramatic, but a little. So that's basically that indicator saying, well, the economy is going to recover faster. That might therefore give us a little bit more inflation. The markets overall looking all very positive. Everything is in the green here. NASDAQ, S&P, Dow Jones Index even. VIX is down, so volatility is down. That's good. Orange juice and coffee are also both up, always essential. And so that's quite positive, really. Europe car registration numbers are significantly below expectations. So we're expecting about 22% growth. They only got 10%. So that's not the greatest sign. I mean, for sort of Tesla stocks, that isn't ideal. It could just also mean that Europeans are on holiday and they are therefore not buying cars because they're bored. So they've gone on holiday and they're now enjoying themselves. US EV registrations are up 95%, which is tremendous. And of course, great news for Tesla, though it's still only 2.3% of all new cars are EVs. So it's very, very low by international standards, which you could say it's bad, but it's also a tremendous long-term growth opportunity, right? When that does eventually change, which it will. We had Yellen talking yesterday late about inflation, and she was saying she expects several months of high inflation, but in the medium term, it's going to come down. But then she said rather unhelpfully that they're going to have to watch it carefully. I wish she hadn't said that. DIDI's can of worms got properly opened just. Apparently, there are, I think, 6 or 7 more government departments who are now investigating DIDI for all sorts of things. So that's just what happens. One regulator walks in the door, they get your files, they look through things, they start calling their friends in other departments, and then everyone digs in. So it's going to take some time. Intel is aiming to buy Global Foundries, a $30 billion manufacturer of chips who are actually planning to do an IPO. So it'd be very interesting to see if Intel can pull this off. It would make Intel a manufacturer of chips for others, not just themselves. And I suspect they might get some nice US government support for that. The chip supply, generally speaking, is improving, guys. So for cars particularly, that's what TSMC just announced. And Renesas plant is also up back to full capacity, so things should hopefully improve there. We've got the NIO IPO delay explained. Basically, they had some regulatory issues here in Hong Kong because they have this NIO Users Trust, which is one of the biggest shareholders, and it's a trust, and that's a little bit more complex. And they also needed to appoint some more independent directors and some women independent directors, so they've done that. And that's sort of the roundup here, really, guys. If you guys want to get some free advice, some free insight, go to my website. It's goatacademy.org, O-R-G. The link is in the top of the chat. It's also below the video. And take this quiz. And if you take the quiz, depending on what you answer, I'll send you information and thoughts and suggestions and education on building wealth and investing that I think you might find very useful. My aim is always that my free material is about 90% better than everyone else's paid for courses. So you can, of course, stop that at any time by hitting the unsubscribe button and you never get another email. Blake, great to have you on the call. You are asking, when you purchase a growth stock with solid fundamentals, what minimum length of time do you aim to hold it for? Well, first thing is, of course, that you have to hit the like button, Blake. And then I would typically say, okay, look at the time frame in our discounted cash flow models. I know you are on the Master Stocks course, Blake. So people do them typically in 5 or 10 year phases. And say with NIO, if you'd bought NIO, say, a year ago, or say you buy it now, you can see that the ramp up in production and new cars and all that stuff, the way they're rolling out internationally, that's all going to happen next year. So you're going to see a dramatic change from the company that is right now to, say, second half of next year. And I imagine the following year and the following year after that will be similar. So you kind of need to look at where is this sweet spot of growth and then what happens thereafter. So I would generally say I wouldn't buy a growth stock unless I had sort of at least a 2 or 3 year time horizon. Longer is better. Why? Because you smooth out and you even out the ups and downs. Because in the long run, if it's a good company, solid management, well-financed, good products, then they will do very well. But they'll have periods where they'll do very badly. So the problem is if you set a tight time frame, you say, hey, I need to get out of this in 12 months. Growth stocks are very volatile. And therefore, you have a significant risk if you hold it for a short period of time. So let me illustrate. So say, let me grab a pen here. So say, say something like a Microsoft, right? The chart will kind of do something like that. Okay. Now a growth stock will do something like this, right? And hopefully outperform it. So if you set a time period, so this being time and this being share price, right? Excuse the horrific drawing. If you say buy it somewhere here, and you have to get out within a year or within 2 years, then you might be unlucky, and that 2 year period might be right here, or the 1 year period you have to sell out at. Whereas, so the longer you hold it, the more you take part of this. Say if we continue this chart, it'll continue doing this, and it'll become eventually less volatile, right? It'll start behaving more like a long-term stock. So the longer you hold it, the more likely you are actually to make a profit on it. Now, I'm not saying you should never sell things. There are sweet spots, but if you hold it for a very short period of time, or just 12 months, or you have to buy something with that, you have to pay for something with that money, you have to allocate it to something else, then your risk is pretty substantial. It's actually the same for most stocks. It's just for growth stocks, it's particularly exaggerated. Okay, guys, let's have a quick look at the market then and see what's going on over here. So, overview. Let's see the winners here. So Square is up nicely, MP Materials, Microsoft, Xpeng, Apple, QQQ overall. Palantir slightly in the green, but only ever so slightly. Tesla is down a little, as is quite a lot of the tech sector. DIDI, of course, being particularly punished here because of that renewed investigation. So bit of a split market at the moment, but it's very early in the day. Don't pay too much attention to the first 10 minutes of the day. Blake, thanks very much for that thumbs up there. I take it you hit that like button. So let's have a look if we've got, no, we still are waiting for those Michigan inflation numbers. They're out in 20 minutes, so we can look at those towards the end of the call. Okay, let me see. Is this up already? Let's have a quick look here if we can see this already. Yeah, we can. Okay, so this is basically shows you the sectors and how they've reacted to the good retail sales numbers. So we've got consumer staples up, which makes sense. Real estate is up. Well, the housing market, again, Yellen was talking about that yesterday. She expects the housing market to continue to be fairly heaty. Consumer discretionary is up, which makes sense. And then we've got a bit of tech and utilities there. And then what's down? Financials and energy. So people are leaving the sort of safety havens and they're jumping more into the discretionary consumer stocks here. Sesame Foodie is talking about Roblox. It's a very popular stock. I can't say I've really dug deep into it, to be perfectly honest with you. But it is, I mean, yeah, I can't really give you a thorough comment on that. I can tell you what the chart's telling me, but I haven't really done a proper fundamental research on that Sesame. But I appreciate the question. I love your name as well. I love Sesame too. Who doesn't? So let me show you a couple of other things that I have in stock here. So there is, if you haven't watched it, guys, there is an interview out with the NIO CEO, William Lee. That's not the greatest screenshot, is it? I have to apologize to him for this one. I literally just pressed pause. And he was talking at PwC's automotive forum in Germany, and it's, I think, part of the European and German PR drive, which is good. And he said some pretty interesting stuff, actually, which I took some notes on here. So let me just tell you what he said. So he was talking about, well, they called him the Chinese Elon Musk, which I think was rather kind, and he didn't disagree with that. He was saying the interesting thing is that he was basically, they're saying about data protection, and he's saying, look, we follow all the local regulation in Norway and everywhere as well. And then he was asked, why did you go to Europe? And he said, and basically all the Germans in the room said, you know, Germany is such a competitive market. Why do you want to come here? And he said, look, the most competitive car market there is China, because we are competing with Audi and Porsche and everybody else and the local brands, and we're doing well. So we think we can do well in Europe because we innovate substantially. Our service and the way we look after customers is our strength. And we've been in Germany and the UK since 2015 with a substantial staff and presence there. And we believe that our product is so innovative that we can be successful in Europe and the USA as well. So he mentioned that as well specifically. And he also says that autonomous driving is going to increase car sales because it's just going to make driving safer, and the time spent in cars is going to be that much more productive, right? You will no longer be distracted by driving. You'll be watching things, doing things, studying, working, being in meetings, all sorts of things there. So Sesame, thanks very much there. I don't want to BS you with some sort of half-baked answer. I wouldn't mind looking into that. I just haven't had a proper chance yet. Aaron's talking about Palantir at year end. Look, Palantir is a growth stock, right? So if you didn't just join me in the last minute, Aaron, I was just illustrating how they are very volatile. And therefore, if you make a plan and you want to buy, say, people buy these call options, these leap options, I don't really understand it, because two reasons. One is you pay a volatility premium. Volatility predictions are always overstated. So you pay too much when you buy options. You should sell options. You shouldn't buy options. And secondly, these are very volatile growth stocks. So, where is Palantir right now at 21 something? There is a chance it could be at 40. It could be at 16, right? That's the volatility at a specific date given. That doesn't mean that in the long run it's not going to do very well, but it's just they are very, very volatile. So I think people making these trades on these stocks seems to me to be very, very dangerous. I think if you did it with a Microsoft or a sort of more boring, predictable stock that is unlikely to move tremendously and has low volatility, it might make a little bit more sense perhaps. But generally speaking, I'm not a fan of buying options. I sell options. I don't buy them. I'm always a net seller of them. And if you want to understand how that works properly, guys, check out my options course down below. That's one of the key strategies I teach. And I was actually just recording a lecture on that. So take advantage of that Build Wealth coupon code there, guys. It's the last one for the Master Stocks course. I've got this massive notepad here. And let me just show you here, because I'm still growing the options course. And this is a really quick one, but basically volatility is on average about 4% overstated. And the problem with that is that when you buy options, you pay a premium for that volatility, and therefore you are losing money with each long options trade that you do. So For example, for Apple at the moment, it says volatility in the next 30 days will be 17%. I think that's very unlikely. In reality, it will be a lot less than that. And we have the statistics for the last 30 years to prove that. So if you buy options, you pay in premium and you are therefore a net loser in the long run. Better strategy is to sell options, and especially when implied volatility is high. So some of that might not make any sense to you, and that's totally fine. I appreciate that. Not everybody's into options. But if you are or if you aren't, check out my course below, the options course, and I teach you all this stuff. Dan says the Palantir January 2023 calls are looking good. I think it's a good trade. Well, I'd be very conservative on the strike price because you have no way of knowing what the share price will be in January 2023. Angel says, Downton's good morning. Angel says it's a NIO ahead and shoulders. Actually, I think a few people have posted that. So thanks for shouting that out. I sort of see what you mean. An inverse head and shoulders. Is that what you mean? Sort of a... I mean, not... I don't know. Something like that, you mean? I mean, you haven't got a clear head, have you? So I don't know if that really is the cleanest of patterns. Michael Hardy, great to have you on the call. You're talking about looking into the future. Have you thought about or see a connection between smart cities, smart homes, and NIO? So do you think, are they going to go into other more smart applications into real estate or the connectivity to smart homes? So I think a lot of what the conversation is about both in Europe and the US is about connecting the car to the house and using the car battery as grid storage for electricity and potentially powering the house and vice versa. And I think that's a smart thing to do. That requires a country where a lot of people live in standalone homes, right? So if you are in a highly concentrated urban country like a lot of China is nowadays, it doesn't perhaps work that well. But I don't really know. I mean, I think there's a chance. I mean, obviously with the NIO life stuff, they're into all sorts of things, and the NIO hotels and houses and everything else. It's possible, but I think at this point they're very much focused on putting out a car that's going to become a sort of entertainment center / workplace. Oh, Desmond, I hit my chat again, did I? Okay, sorry. It was this head and shoulder situation. I don't really see it. Apologies. You can sort of make one up a little bit like that, but I don't think it's the greatest pattern in the world. So apologies, I wasn't showing you that. Is NIO going into solar? I think. Okay, China basically is converting their energy creation into more than 50% renewables, and that means that. Because we have carbon trading now in China, it means if your EV car is powered by renewable energy, it becomes it receives carbon credits because the energy it consumes is renewable. If it's run on energy that comes from, say, a coal-powered fire station, then that is a net negative. So it's important that the electricity that they purchase it comes from renewable sources. I haven't seen them do anything sort of Tesla-like yet with sort of solar charging for the house or something like that. Angel, thanks very much for the kind comments. Desmond saying, in Hong Kong, it's near impossible to install chargers in apartment parking lots. Yeah, I agree with you there, Desmond. I think Hong Kong has a high density of charging stations, but they are in public, in spots or in malls, because in very high density housing, it's quite hard to do. You just haven't got power there. You got to put the lines in. There's got to be a meter who pays for it and all that sort of stuff. So it's quite difficult to do. And if you live in a building with, say, 500 owners that own, an apartment each, agreeing on anything is a pretty tricky thing to do. Are you saying, okay, this pattern they're seeing is... I see what you mean with that pattern. But I think that's taking it too long. I think if this is the head, I know. I mean, I wouldn't look at it like that, to be honest with you. I think drawing a pattern that spans 8 months is slightly wishful thinking in my book. I mean, everybody has a different way of looking at charts, but to me that isn't necessarily very useful. But thank you very much for throwing that out. I appreciate that, Exxon there. Let's have a look at the market, guys. Where did the market go? Here it is. See what's changed. And NDM still up, Square still up, Microsoft up, Palantir still in the green at 21.55, PayPal, Google now at sort of near zero, and Tesla down just a fraction, 0.18%. So not a great deal. Really, the only real sort of losers we have here are DIDI and Coupang. Not sure why Coupang's selling off, but I still think it's an overvalued business. You know what? It's actually kind of fitting in a sense that DIDI and Coupang are both SoftBank companies that I think were listed at probably too high a price point. So I'm a little bit cautious of SoftBank IPOs now. I'm not saying there's anything wrong with SoftBank or that they had any ill intentions, but when you have 2 in a row like that, it doesn't help build the brand, does it? Let's look at, we still got 6 minutes till the inflation expectations are out, guys. So if you have any other questions, now is a good time to throw them out. I'm always glad to take them. If you haven't yet already, make sure you jump over to my website and make sure you fill in that quiz and make sure you get some free insight into how to become a better investor and how to plan your finances more smartly. And that will cost you absolutely nothing at all. As I always say, I aim for my free content to be 90% better than everyone else's paid for content. So that's the aim. If you are ready to make an investment in yourself, check out the premium courses, guys. There are 2 of them at present. There's the Master Stocks, and that's the options trading. If you're trading more frequently than, say, 2 or 3 times a month, especially if you also sell things, say, in any given month, doing a bit of options is, I think, a much smarter way of doing it. It's less risky, defined probabilities, and it takes up less capital, yet it's leveraged in a pretty interesting way. So take advantage of that coupon. It's Build Wealth, guys. It'll be the last one for the Master Stocks course. I'll show you. Amro's asking about price targets for NIO and Palantir. Okay, let me pull up for you something where I can show you that. Okay, so if you go on our Patreon, guys, and you view the back end of it, the inside of it, is you can click on NIO, and then you'll see. Okay, maybe there's too much NIO content. You click on the DCFs, that stands for discounted cash flow model. There's one for DiDi and Uber here, Alibaba, and then here's a NIO 10-year model. And I've got a fair value here at $98. To me, that's a 12-month price target, because by that point, in 12 months' time, we will have the ET7 rolling out. We'll have a full quarter of deliveries and sales. Actually, we'll have 2 quarters of sales and a full quarter of deliveries. We'll just be launching the second factory. We will probably also be about to start selling the next sedan, the ET5 or ET3, whatever it's going to be. And I think we'll be en route to, say, 200,000 deliveries for the year. So the world will look very, very different. That's NIO. And then Palantir. Here it is. Palantir, I'm at $77. That's possibly a little bit further out than 12 months. Why? Because the only thing that's going to move the market here is not sort of excitement and hope and forward-looking stuff. It's just quarters and quarters of strong growth. And by that, I mean 45% plus per quarter growth and private sector growth as well as government growth. That's the only thing that's really going to turn Wall Street's view around on this. So I think if we get great quarter now, and we're going to get earnings pretty soon, then and we get it again in December, and then again next March, and then again next June. If that 4 in a row could change the dynamic of this, it could change the direction how people are looking at this. But that's what's required to move in this direction. And if we get 1 quarter in there that doesn't give us that trajectory, then I think this is going to take us a bit longer. Dan saying, if that's your price target, then why do you think buying leap calls is bad? Okay, I totally appreciate your question. I like that you are asking it. So, okay, let me show you why I think that's bad. So if you have a, okay, worst chart in the world, okay, this is time, right? And this up here is dollars. So I'm going to put on two share prices. So I'm going to put on one in red, let's just call it Microsoft. And say Microsoft in this time period is going to do a little bit of this, a little bit of that, a little bit of this, a little bit of that. It's broadly speaking going to go up with relatively small movements. Now, take something like Palantir, or for that reason, any growth stock. What is it going to do? It's going to do that, it's going to do that, it's going to do this, it's going to do that, it's going to do this, it's going to do that. And it's going to be very, very, very volatile. And it looks like a child has drawn this, right? And over time, of course, it'll become less volatile. It'll act more like a grown-up stock. So therefore, for me to go out and say, I don't know, in March 2022, the stock price is going to be exactly, somewhere here. It's very risky because my volatility is insane. Yes, I might be at that level or I might not be. So I don't like to buy options for that reason. I prefer to sell them. And I also recommend to sell them about halfway to your profit target. So I very rarely wait till expiration unless I'm selling puts or something like that. And I want to keep the premium. If you're buying things, it's just risky. How do you know it's going to happen that month? What if something happens in that week to the market? What if Yellen says something or Powell says something that tanks the market? So I think those are one-directional bets with a very high risk. That's just my way of looking at it. I noticed Barber on your screen recommendation was to sell. Is this for a short-term outlook, says Chant. Okay, I don't know what you saw there, but I think Barber, look, it's a fantastic fundamental, right? I mean, the numbers are tremendous. The underlying business is growing. They're printing money, huge free cash flow. The only problem is this sentiment that we are in, US-China trade relations and the Chinese, well, people call it the crackdown. I just call it regulatory overhaul and sort of catching up with regulations. And that's going to be a drag. And it has been a drag now for 7 months. And I think it might be a drag for another 7 months potentially. We hopefully will get that Ant IPO at the end of the year. That might give us a bit of a bounce. So I haven't sold Barber, but I'm also not adding any at this point because I think if this takes, say, 6 months or a year, then if I put the money into my core portfolio, which gives me maybe 15% a year, then I'd rather take that money because it's more assured at this point. And Simon is saying SoFi is getting shorted hard by Wall Street because it's going to dominate the old banks. And yes, I actually I'm kind of with you on that sentiment there, Simon. I think if you look at who's shorting it, Nomura and all these big investment banks, it does seem kind of ironic. And at the same time, JP Morgan is buying up fintech companies left, right, and center. So yeah, I think there is some intent there that is not perhaps the most gentlemanly intent on their part. I'm totally with you on that. And that's why the stock price is in the dumps. Okay, you guys, okay. You were saying there's some trading view recommendations, Barber, sell questions. Okay, maybe I had something open here that said that. I don't know. Oh, is it just the some of these technical indicators? Maybe that's what you were looking at. Sorry, I'm not quite sure what it is. I was flipping through there. Chan, thanks very much for the question. Is NIO about to break support levels? Let's have a look here. 144. Whoops, I didn't mean to draw that line. So we are at $43 and we have support here, sort of 42.90 or 94. I put that in. That is indeed a support level. We are below the 100-day moving average line at the moment, that blue line here, which isn't great and also isn't logical. But it's just, I think, part of the slight inflation concern. I think the better retail sales numbers actually concern people a little bit more. The stock screener page. Okay, yeah, those will just be automated indicators based on the technicals. So what they do in here is you can see down here more. You can click on more technicals, and then you can look at sort of what the moving averages and etc. are telling you, and they are negative. To me, a negative isn't the same as a sell signal. It just means they're negative, but that's how they display it. So I don't know how useful this is, to be honest with you, but it's you could track it. For me, it'd be more useful when it breaks through certain points, say when it breaks through 50-point lines, for example. But yeah, you can certainly look at those. They've got tons of that on there. So let me have a look, guys. We should have some more data out. Okay, Michigan inflation expectations are again higher than expected. Can you see that here? That 4.8%, we were expecting 4.3%. The 5-year inflation expectation is also slightly higher than expected, but only slightly. So this is not good for growth stocks, right? And yeah, so that's basically it. What's the consumer expectation? Oh, that's consumer sentiment. Okay, so consumer sentiment is lower than expected. So that slightly offsets the inflation fear, because if people expect less economic growth, then again, it gives the Fed a little bit more leeway. But the numbers are not wonderful for the growth segment of the market. Let's have a quick look at the futures here and see if anything has changed. So yeah, we've lost some of those gains across the market here. We definitely have. And let's have a quick look at the stock market map as well to get a feel for what's doing what. So we're getting money again pouring into the safe havens, the Microsofts, and so on. And the consumer cyclicals is losing some money, especially the Chinese ones like Barber, etc., VIP Shop, and so on. But broadly, the market is just about in the green overall. Thanks, Jan. Thanks for sharing that there. That number just out. Howard saying $43 is a significant level for NIO. Yes, it is. You are quite right. Although perhaps it's ever so slightly below that 42.94. And at the moment, we've broken below that support line here. So that's not wonderful. Next support, where is it? Really? $40, I would say. I'd say that's where the next real support sits here. Down here at about 40 in a little bit. So it doesn't mean we have to go there, but it just means that that's where the support lies. Though Friday is still young, lots can still happen, guys. So Desmond is asking, how are the OJ futures? That's a really important question, Desmond. We are going to have to look at that. We can't let you hanging there, worrying about what's happening to OJ. So let's just pull up the futures again here. Orange juice is also down, guys, 0.45%. So your breakfast might get a little bit cheaper. Guys, I think that's probably around about a wrap here. We have slightly mixed economic data out here. Both could point a little bit towards more inflation worries. So that's probably what's going to drive the market, at least the next couple of hours. I'll be back live tomorrow. I quite enjoy doing the weekend one. We'll do one on Saturday. And then on Sunday and Monday, you won't see me because I'll be working on the courses. That's normally what I do. I record and structure and research how to make them better, guys, and plan the academy some more. So check out the Master Stocks courses and the options trading course. That Build Wealth coupon will expire on Sunday. It'll be the last one you'll see for the Master Stocks course here on YouTube. So check it out, guys. And if you haven't already, take the free quiz on my website, go to academy.org, and you'll receive a wealth of information for absolutely nothing at all. You can unsubscribe at any moment if you should you choose. I will never sell your data, guys. That's also a complete promise for me. And if you are ready, as I say, to make an investment into really moving your wealth building onto the next level or into earning more income using options trading, guys, check out the courses. And thank you very much. Have a beautiful Friday. Don't sweat too much about the small movements in the stock markets. Enjoy your day, guys. And thanks for joining, and see you on the next one.